Hi, everybody. Welcome to the SJK Wealth Management podcast. Today we have a great guest, Jeff Lavine with Keller Williams. He's a local realtor. You've probably, if you follow it all on Facebook, I mean the Doylestown groups, you see Jeff's post about some of the historical properties here in Doylestown and some of the great real estate we have in this town. So we wanted to bring Jeff in to get your insight on the real estate market, and obviously has a huge impact on our clients. Real estate being a major purchase, whether it's your primary home, second home, first home, later, investors. So we wanted to get just your opinion on where the market is and have a discussion. So thanks for joining us today.
Happy to be here. Very happy to be here.
Thank you. So let's just start with a market overview of kind of where you're seeing the market right now, certain trends. There's been a lot of movement in the real estate market in the last couple of years with interest rates, with house prices going up significantly. So if you just kind of give us your overall pulse right now.
Yeah. So again, it's really great to be here with you guys. The real estate market in the past 7 years since COVID just has exploded and has changed so dramatically. Mm-hmm. And so I do have to say, this is my 41st year in the business. So I've been through many kinds of markets, sure, which is very helpful to me in understanding how to operate in different kinds of markets. But what happened with COVID, just everything changed dramatically. And it hasn't really reverted, and I don't think it's going to. So with that, as we all know, the inventory has shrunk, prices have risen, things have just changed dramatically. Today's market, it remains really strong. It has been an extremely strong market for the past 7 years. And even though interest rates have gone up and gone down a little bit, I have not seen a big affect in the business. The volume's down a little bit, but prices are up. There are some slight shifts, but it's still a very, very strong market, especially for where we are. Yeah. So there are areas of the country that are not doing well right now. Austin is not doing well. Orlando's not doing well. It's really interesting. I follow national trends because it interests me, not just local trends. But Pennsylvania's had a really good 2025. And our area, Central and Upper Bucks County, remains strong because we've always been what we are today. Almost a bedroom communities where, small town communities, good schools, good hospital system. We are a very, very big draw. And so if I go back 41 years ago when I started my career in real estate here in Doylestown and serving all of Central and Upper Bucks County, it is vastly different. Just the way that the town is different, so is the number of people who want to move into Doylestown because they have discovered us. And not just Doylestown, but the surrounding area as well. Central Bucks and New Hope-Salisbury school districts are extremely popular.
Mm-hmm. Jeff, are you seeing a lot of New Yorkers come this way?
We see a lot of everything coming this way. So yes, New Yorkers have historically always been coming out to Bucks County. So
they call it the country.
Well, and we are the country. We're the country for Philadelphia. We're the country for Manhattan. And we also have the proximity to Princeton and the pharmaceutical companies in Montgomery County. So we're so sweetly located. I have always been so grateful that when I ended up in this career, that it ended up being here in Bucks County, because I could have ended up a million other places doing this. And this is a place that just remains highly desirable.
So as far as demand and inventory, we're still seeing, you said less volume, but higher prices, still not a lot of turnover of homes, people holding their homes longer. What do you kind of attribute that to?
Yeah, well, I mean, inventory has ticked up a little bit from what it was. So there are houses coming on the market, but they're still, the desirable houses are very desirable. So there are still many, many homes that go on the market and get multiple offers and go over asking price. That's all about pricing and promotion, and how it's put out there to the public, obviously. But it stays very strong. We have people are staying longer in their homes. It used to be 7 to 9 years. Now I think the numbers are like 10 to 13 years of people staying longer in their homes. moving is an expensive proposition. And I just was reading today, and you guys know better than I about this, what's called the K economy. And so, people with money have more money than they ever did, and the people that are struggling even harder. So it's an interesting time. So what we're seeing is that in our area, there is a lot of wealth, and there are a lot of people who are able to pay prices to be where they want to be.
Right. And have you seen that price increase? I mean, we've seen a huge increase directly after COVID in those few years. Have they cooled down at all? We're still seeing kind of strong price trends.
Yeah, we're still going at like 5 to 6% a year, which is kind of typical.
Okay.
At one point during COVID, it was much more extreme.
Sure.
So the appreciation rate has slowed up a little bit. Houses are still appreciating.
Right.
So, and in my career, I have never seen a hard hit on pricing in our area. We have always been able to stay because of all those things that I just talked about, all those elements that make us so desirable, they continue. So people have always wanted to buy here.
Yeah. Go ahead.
Hey, I just have a quick question I want to ask. With that demand that we have here, are you noticing more cash buyers, or are you finding still people financing based on these higher rates? What are you seeing as far as that mix?
Well, one of the things that's so difficult in this market is trying to explain to young buyers that it's not their fault, that it's their financial profile that is a problem for them. And there's no easy way out of that. So when you're competing for a property, something comes on the market, and I just recently had a house for sale, and I'll give you the facts of it. It was listed for $1.250,000. 45 showings in 3 days, 10 offers, 5 of which were cash, many of which waived all inspections.
Right.
So the competition is there. It remains the same. And the hard part for me having to explain to younger buyers that are getting a mortgage, when you're working with the seller and you're looking at 10 offers or even 3 offers, and one has a mortgage and one is cash, you tend to lean towards the cash if all the other terms of the contract.
Why do you think that is? Because at the end of the day, the seller's getting the same amount of money.
There's 2 phrases in real estate. One is that it's all cash at the settlement table.
Right.
And the other one is cash is king.
Okay.
So you choose your flavor of what you want. So for most sellers, cash sounds really good.
Okay.
So even if you have pre-approval, even if you have approval, there are still other steps, that one needs to go through. If it's pure cash, you just know you're just waiting to go to settlement. There's nothing else that's going to interfere.
Right. Nothing's going to fall apart as easily. As far as that mix of buyers then, look, we work with a lot of wealthy clients. We're a wealth management firm. We rarely advise clients to make all cash offers on homes. So it's just interesting that there's so much all cash offers, and it's just, it doesn't seem prudent in most cases, I would think, unless you just happen to have $1.25 million laying around. Certainly raising those funds and having the ability to do that, or maybe even using outside financing are things that we can do with our clients. But I don't know, just where are all these buyers with millions of dollars of cash coming from?
Well, and let me say, there's nothing wrong with getting financing, obviously. So we all, if I were going to buy a 1.25 house, I would have to get financing. So there's nothing wrong with it. But there are just a lot of people in this economy that have a lot of money. And I also have had clients who intend to get a mortgage, but they write the offer as cash because they have the ability to pay cash.
I see. So is that happening a lot where it's a cash offer, but
not a lot,
or maybe they put a
happens.
financing on after they close?
Well, we actually just got added to our agreements of sale, which are constantly changing, a third box under the mortgage section, because one was waiving the mortgage, one was that you're going to get a mortgage and then all the terms, but now we have a new one that you're waiving the mortgage but reserve the right to possibly get one.
Okay.
Oh God, I thought you were going to say that box was cryptocurrency. I'm glad you.
Not yet. I know. I don't think
For
we
our
can.
compliance officers, we're not recommending.
We're not recommending it.
Please don't come to settlement with crypto for me also. So we are all aware now, because it used to be, because I've done this in the past, in order to win the deal, in order to be competitive, I say to people, okay, you can get a mortgage, but if we can show that you have the funds, you don't have to liquidate your funds to buy the house.
I see.
But let's write this because it shows real intention. And if there's a problem, you are going to have to pay the cash. I don't think that
There's a risk, right?
Yeah. You're saying that this is what you're going to do, but you have the ability to do it. You can get a mortgage later. And then when the appraiser would call to go into the house, the listing agent would not be happy with that. So now it's just all about, disclosing. So we just started, this just happened 2 weeks ago, that the contracts changed to disclose that, yes, we're writing this as cash, but we reserve the right to put a mortgage in this for ourselves, having no effect to you, Mr. Seller.
Yeah, because it's going to be after closing.
Exactly.
Okay. What advice do you have? One trend I've noticed, I work with a lot of younger clients that are getting wealth and starting to really, getting into building their careers. They're starting to have families, but all this is happening later. So I'm starting to see first-time home purchases in late 30s, early 40s, right? So these things are getting stretched out where they've built up some significant wealth by that point. But going through the first-time home purchase later on in life and still having struggles doing that, I don't know how I advise a 23-year-old or 24-year-old to buy their first-time home unless they, been living at home and just saving a ton of cash. Right. But what advice do you have for that demographic?
For the first-time home buyers?
Yeah, because they could even be later in life at this point.
Yeah, well, we typically have to expand their area. One of the sadder things is that many young people who were born and raised in Doylestown have a hard time purchasing in Doylestown now. But we have wonderful communities surrounding us, which perhaps that's where you want to begin. I always counsel buyers that, sort of the way that it used to be is that you would start with your condo and then move to the townhouse and then move to the single family house. Right. Although these days, many people want everything all at once. Sure. Young people.
We're also seeing condos at $600,000.
Well, and then there's that too. But yes, exactly. Well, yes, in Doylestown once again. There's a remarkable number of people who are of my generation, baby boomers, who've done very well for themselves. And they are buying houses for their children.
Yeah.
So it is not uncommon for somebody to be paying cash for their child's house for them, which I find amazing because back in my day when my parents said, we'll help you out, they meant that they would buy the washer and dryer.
Sure.
Right. But they did not mean they were going to pay
the whole house,
$700,000 for a house for them.
Certainly. We've seen that trend as well, and also a planning. As we do a lot of estate work, and that seems to be the number one thing that our clients are thinking as far as helping their kids is post-college is helping at least with that down payment, if not more, and becoming an area of planning that I don't think, because I don't remember even 10 years ago that as like a significant or commonplace strategy for clients, but it's almost, especially for our boomer clients that are looking at retirement, is starting to think about, I need to help our kids. They might have 3 or 4 kids too. So helping with that, at least that down payment. It's certainly a new topic of planning we've been getting into.
And I see a remarkable number of clients who are now purchasing in trusts.
Yeah.
And so that's changed. It used to be, I would see that on occasion, rarely. It is more and more often. I just had 2 that we're on our way to settlement in which they purchase under their names, and then in between they decide to put it in trust. So there's more and more of that going on to protect the family.
Yeah,
funds.
they're all personal decisions.
Right.
Yeah. Are there any complications you see at closing when purchasing in trust?
No, we just have to do the paperwork prior to closing and make sure we have the trust documents, and all that needs to be done.
Sure. Well, I'll ask the question that everybody hates, because Scott and I get this question all the time. So what's the market going to look like in the next 6 to 12 months?
Oh, God.
Right? So get your crystal ball out.
I know. Where's my crystal balls in the shop? Oh, my
Well,
God.
you should have falling rates.
Well, yeah, The rate thing is so interesting to me because I do know that like if rates would just get down to just under 5.99, there'd be like another, I forget now the number of buyers that would enter the market.
Sure.
However, I always need to say this. I don't stare at the rates in that way only because when I came in the business in 1984, rates were 18%.
Yeah.
And I sold a lot of houses. So
Bought our first house at 14%.
Well, and so when rates, we never expected rates to drop below 10%.
Yeah, right.
In fact, I'll tell you briefly that we used to have these little books that mortgage companies gave us so we could calculate the financing because back then we did all those calculations, mortgage companies didn't.
Wow.
So yeah, I mean, just it's so interesting how this job has changed over the years. So we would do those numbers and we had these little books they would give us as new realtors. And when rates dropped below 10%, the books they started at 10%.
They never thought that was even.
We didn't have books. It wasn't a possibility that money could be lower than 10%.
Oh, wow.
And so at that point, we spent a couple of years of not knowing what we were doing with that. We had to just look at half of it and then double it. There was a way to do it. But and then they finally printed us new books. So the idea of being below 10% was just unbelievable to me. And when they went down to 6 and 5, and I'm like, oh my God, it was like free money. So this 6.25, which is where I think we were on Friday,
It's reasonable.
It is.
I think so, but I'm not the purchaser. I'm the realtor.
Just not in our short-term history here with free money.
Yeah. So to answer your question, what do I see? 3-4 years ago, people were predicting that things would return. I love this phrase, return to normal. I don't even know what that means. And I don't think that anything ever returns.
Yeah.
My hair is not returning. So there's a new normal.
Yeah.
Exactly. So I see where we are now into the foreseeable future.
Sure.
10 years at least.
We tell a lot of clients, to be careful what you wish for as far as those low rates as well. Because if we do have a low rate regimen like we did, go back to where we were, something's broken. Something bad has happened where the Fed has have to really accelerate and try and spur the economy. Right. So those low rates might come with a job loss, so we got to be careful there. One thing that, Scott, we were talking about beforehand is the stock market doing really well, right? So we're at all-time highs, and how that might impact the real estate market.
Yeah, we were talking about that. How do you think? And again, we can't recommend specific things. We're not talking about that. But how do you think the market moving up at times? The market moves up and down, but in what we call a bull market, where portfolios are growing typically. Do you think that comes into play when someone's considering buying a home?
Oh, I definitely do. I think it's just an attitude, when you know that you're doing well.
Comfortable. Because
we all look, nobody's going to want to go out and buy a new house if they're unsure about their job, if they're unsure about their portfolio. Mm-hmm. So it's all about confidence.
Right.
So you can't go out to buy a house if you don't have some confidence you're going to be able to make those monthly payments, you can take that money out of your portfolio for a house. So it definitely gives those people in the upper tier who are making that money through the stock market more flexibility in what they want to do.
Right. If we shift gears a little bit, because we're talking about first home, primary home, maybe not first or second, or third maybe, but there's also an investor market out there. So I don't know if you see that that much in Doylestown. I'd be interested of kind of the investor appetite locally, but just what you're seeing with those trends.
I would like to see more investors in our area. That has shifted in the fact that I used to deal with a lot of investors in Doylestown. Yeah. Back when I started, there were a lot of people that were continually buying properties for investment. And but now with the prices being what they are, it's not as easy.
Yeah, the cash flow is not there necessarily.
And even though rents are high, when our condos can be $750, it's hard to to make those numbers work. I always counseled my investors that they don't have to have a positive cash flow the first year. That's almost hard to find.
Yeah.
But if you're using a mortgage, which is what people used to do, your mortgage stays constant, your rents increase. Mm-hmm. So if you can just figure that in 3 to 5 years, you're going to have a positive cash flow, then it's a worthwhile investment.
Right.
I used to do, I don't want to say a lot, but it wasn't unusual for me to have clients who bought something knowing that they were going to sell it in 16, 17 years to fund their kids' college education.
Interesting.
So the first time I came across that, a very long time ago, I thought it was just a brilliant idea. So I started to talk to a lot of my clients about doing that. And it really was a great thing to do. So I have some investors that I work with, but not as many as I used to, because I think that this market is difficult for investment.
Sure.
I do think that if you have the ability, like maybe a lot of your clients do, having that real estate portfolio, your portfolio should always be diversified.
Yes.
So if you're in the stock market, you should have maybe a condo or 2 condos or, whatever it is. If you're able to purchase something up in up in Doylestown Borough or any one of our river towns, New Hope,
right,
Lambertville, Newtown, that is both commercial, residential in one building where there's a storefront and apartments upstairs. Mm-hmm. I mean, there are great opportunities out there.
Yeah.
And I don't know that enough people are looking at that.
Yeah, and maybe it's shifted back to, just a new normal of, interest rates were high in the past and there was plenty of investor appetite. Obviously prices are higher now, but like you said, rents are higher. So it might just be those really juicy returns of the last 7 years or so aren't quite as there like they used to be. So it kind of holds people back, but the appreciation, that eventual cash flow is still there and a diversifier, like you said. So maybe people giving a second look to that space.
And I'm not sure that people aren't spending more money on their own personal residences than thinking about doing investment properties.
Right. Mm-hmm.
So that's their choice, but I think it would be wise for them to pick up a couple investment properties. I think that would be a wise thing to do. But I think a lot of people are buying second and third homes, and there's a lot to be bought out there.
Anything before we wrap up? Because we have to wrap this up soon.
Yeah. Well, I appreciate you coming in, Jeff. You gave us a lot of insight here on the market. Again, people can follow you online. You got a great following there. If you want to speak anything about your writing and your page there to promote a little bit.
Jeff's a wonderful writer, everybody.
Thank you very much. So you may know my name, Jeff Lavine, from me being also my moniker of roaming realtor of Doylestown, which I started during COVID 7 years ago. And that's a great joy for me to do. And I just confined myself to Doylestown Borough because it began on a walking tour for myself. People very often ask me, can you do this in Plumstead? And I'm like, no, I just need because I am a full-time realtor and I only have so many hours, but I enjoy doing that. So if you want to take a look at any of those properties, I talk about the history of properties and architecture of properties and very often local people, personalities. I have a Facebook page dedicated to the roaming realtor of Doylestown. Yeah,
it's wonderful. I recommend people check it out. And
thank you. That's nice of you to even mention it. So I'm just very happy to be here as a productive agent these last 41 years doing the thing that I love so much.
That's wonderful. Well, thank you so much for coming in.
Thank you, Jeff.
Everyone, thanks for watching.
Thank you,
we'll
everybody.
See you on the next one.